2022 in compliance with Article 8, Section 5 of the Charter. Item 7, LM 2022-0463, order to read and file the updated budgetary and financial reports for the month of August 2022 in compliance with Article 8, Section 5 of the Charter. Item number 8, OR 2022-0030, ordinance amendment of the Board of Alders of the City of New Haven, updating Ralph Walker Rink fees of the New Haven Code of Ordinances. These items are filed with the City Clerk and may be inspected at room 202, 200 Orange Street, New Haven. Per order, the Honorable Adam Marchand, Chair, attest Michael Smart, City Clerk. If you need a disability-related accommodation, please call 3 business days in advance at 946-7651-VOICE or 946-8582-TTY. The public may send comments to public.testimony@newhavenct.gov. Thank you, everyone, for listening to that notice. We will now hear introductions from committee members, starting to my right.
Had a tap just once, Mr. Chair. Good evening, Richard Furlow, Ward 27.
Stephen Winter, Ward 21. Sal DeCola, Ward 18.
Adam Marchand, Ward 25, Chair.
No, President Clerk. Andy Santana, Ward 15.
Anna Festo, Ward 10.
Aisha Walker Myers, Ward 23.
Thank you, colleagues, for being here. This is the first meeting for this committee with these new microphones. So bear with us as we get used to a new way of being heard. So far, thumbs up. You can hear me? Excellent. We also have microphones pointing to the seats that are across the table from us. So when staff and others come to present to us, you'll want to make sure that you speak in the microphone. But I am quite hopeful that this will be an improvement over our prior situation. It seems to be already in my short time at this table tonight. Let me just say a word about this rather long agenda I read through. It's not as involved as it sounds. It's going to break down into 3 sections. Items 1 and 2 pertain to fiscal year ending June 30th, 2021. We're going to hear from our city staff and from our consultants from RSM. And so that's when we'll talk about items 1 and 2. So we'll do those together. And then we'll pause to see if any member of the public wishes to testify. Items 3, 4, and 5 all pertain to fiscal year that ended June 2022. So we'll hear those 3 together, really focusing most likely on 4 and 5. We'll pause after that, hear if any members of the public wish to speak, and then we'll move on to our final 3 items, 2 monthlies, and the proposed revision of the fee schedule for the Walker Rink. After those 3, we'll again pause to see if there are any members of the public who wish to testify. So our meeting tonight is really going to be broken into 3 parts, not really 8, but 3 parts. Items pertaining to fiscal year 2021, items pertaining to fiscal year 2022, and items pertaining to this current fiscal year. And that's the way it's going to break down. I am hopeful that we will be able to get through this information in an efficient way, in an enlightening way. And we'll now begin with items 1 and 2. I believe that our city acting comptroller and staff from RSM are going to come forward and talk to us about these items. When you gentlemen have an opportunity to get seated and settled, please give us your names and addresses for the record, please. And I bet you have some paper to give us, Mr. Gorman. Is that correct?
Absolutely.
Let's take a moment to do that.
Good morning, 45 Jefferson Road, Bradford, acting controller.
Good evening, Scott Bassett, 225 Asylum Architect, partner with RSM US LLP.
Thank you. And I believe we have all the materials, so we're ready.
All right, thank you. So as required by federal, state, and local law, we are required to get an audit completed by an independent external auditor, which is RSM. As Mr. Chair mentioned, what you have before you and what was submitted was for the fiscal year ending June 30th of 2021. We'll let Mr. Bassett go through the results of the fiscal year 21 audit.
Thanks, Michael. Good evening. This is a little handout. Instead of going through the 400 pages, because it looks like you have a big agenda tonight, I'll take you through this quickly. Just to give you an idea of the scope, my team probably spends close to 2,500 hours here in the city doing the audit of the financial records of all the departments, including the Board of Ed, and all what have you within the city. So what I'm going to do is kind of walk you through kind of our responsibilities as your external auditor, some of the financial statement highlights, and then just open it up for questions if that works for you. Okay. So this is just a quick handout, an agenda. Turn to the third page is just some required communications that I have to give to you, acting as the folks that hire us to do the external audit. We have a responsibility, which was described in our engagement letter, saying that we'll do the audit in accordance with generally accepted auditing standards and government auditing standards. Our goal there is to give an opinion on the financial statements. The financial statement opinion rendered by my firm was an unqualified, clean opinion on the financial statements. Basically, meaning we were able to do our work in accordance with those standards, and that the presentation was in accordance with generally accepted accounting principles. We work through the year doing the audit and come out with those results, working closely with Michael and his staff, pulling lots of information, asking a ton of questions, and a ton of information that's provided to us. Embodied in the financial statements are estimates. Some of the key estimates, as you can imagine, have to do with your pension plan and your OPEB plans and the actual results that have to do with those. Also included in those will be some workers' comp actuarial results. Anything we have to go to a third party to get an estimate are our snippet estimates within the financial statements. There are similar adjustments given to us, as you can imagine. The city does a hard job trying to close out all their records by September 15th each year. They provided some trial balances. We come in and do our work. As we're doing work, they thoroughly review those and give us those adjustments as we're doing our work. We had no disagreements with management. I mentioned key items we discussed were the actuarial assumptions. What we do with that, since we are not actuaries, I send that information out to some internal actuaries to go through the required documentation to make sure everything is up to date and these assumptions used are accurate. The final thing we do, we get a rep letter from the city management saying everything we asked for, they gave us, anything that they need to tell us, they tell us pretty simply, put there in 2 sentences, but it's probably a 25-page letter that we get that across. So overall, clean opinion, very good audit, and I'll go into the results. And one of the things I'll just say, the city staff here at City Hall, take complete ownership of these financial statements. Work very, very hard to make sure that things are up to date and accurate and timely. We have weekly meetings talking about progress, top 5 things that we'd like to get done. And they're always on time, always working with us to accommodate that. So I'd be remiss not to say that up front as we go through the results, because I'm going to go through it very quickly, but there's a lot of man hours to get to these numbers. As I mentioned, clean, unmodified opinion on the financial statements. What the city does is take an extra step and submit the report to the GFOA to get recognized for financial reporting. Basically, this award is for accuracy, transparency, and additional information, more than that is required by state statutes. So the reader of the financial statements can have some more information as it relates to the financial information of the city. The city's on the full accrual, something that really we report on once a year. The debt position decreased by $55 million. And what drives that mainly are change in actuarial assumptions. If the market has done well, that decrease might not be as great. If the market does bad based on your pension assets, it could be worse. And if you change an assumption, a mortality table really drives those numbers. So I wish I could say that number could be consistent each year, but that's a number that, based on the numbers that go in there, really could be consistent because it's based on a lot of factors other than just debits and credits as we see them as we pay bills and pay insurance in. So again, that's one key aspect. The general fund, which is really your key fund, your operating fund that you all deal with, had assets of 123 million, liabilities of 102, and you had a net positive fund balance of $20 million. So if you go back on the history over the last 6 or 7 years, you'll see that has continued to climb to the $20 million from maybe a deficit 5 or 6 years ago. So hard work, budget management, and making sure right decisions are made. Revenues for the city are about $600 million in the general fund alone, which includes your property taxes, some non-specific grants and things of that nature. Expenses were $604 million, and the fund balance had a slight increase this year of $2.2 million at the year in 2021. So overall sound results. I'd say there were no surprises as we went through those numbers from what was communicated to you probably a few months after the year end. So pretty sound results. Embedded in the financial statements are a number of funds, but we have some where we go through criteria and we consider those major funds that have to take a closer look at just based on some mathematical criteria. Education grants funds, typically revenues will equal expenditures in that fund because they're all grant driven. We're about 120 million for 2021. Capital project funds had expenditures of $60 million in the current year. The other special revenue funds had expenditures of $9 million, and then the non-major funds had expenditure of $38 million. So you can see you're almost up to $800 million in expenditures when you combine the city as a whole. And the total revenues were $800 million, and expenses $833 million overall for the city on a modified accrual basis of the town. So a lot of activity there and a lot of things to take a look at. As I mentioned, one of the key elements in that first net position calculation has to do with your pension and OPEB trust and the numbers that go with those. Those funds combined had $633 million in investments during the year. The net investment income for the year was $149 million. But what you're looking at there is in June 30, 2020, the market was low, okay, and rebounded by 2021. So that swings that number immensely. The police and fire fund pension plan was funded about 40%, and they had a net pension liability of about $594 million. The city employee retirement fund was funded at 46%, and they had a net pension liability of about $272 million. In the OPEB plan that has come on the books at a net liability of $828 million based on the actuary results. The details of that are really better explained by the actuaries as they talk about assumptions and things that develop those numbers. The notes are pretty consistent with the prior year. Really no significant new accounting pronouncements were issued during the 2021 year. At the end of 2021, you had bonds payable of $624 million of general obligation debt. You had grants outstanding, those are grant anticipation notes related to the school construction projects of about $69 million. And your claims, liabilities, and things like that were measured at $11.8 million. Talk about the debt pension liability, the OPEB liability. During the year, the city incurred about $117 million in medical claims for the year. And there's some tax abatements that the city gives to property holders of about $7 million over the year. So from a financial statement view, positive fund balance, obviously the key metrics here and the estimates are related to those actuarial assumptions. And so overall, I thought the audit went well. A lot of man hours. We still were working in roughly a remote environment. And as we're going to different departments, a little bit harder to do. We'll be on site more this year as we go through it, so I think it should be more efficient. In addition to the financial statement audit, we do what is called a compliance audit for both the federal and state. And expenditures from a federal level were $90 million in the current year. And from expenditures / revenues from the state of Connecticut were $325 million. Those numbers will fluctuate each year as you go through. Again, we do an audit in accordance with government auditing standards, and we talk about internal controls. And we had one comment this year, and that really had to do with when our actuaries took a look at the results. We had some questions about the assumptions used that they were adopted, and there was a mathematical error that we were able to caught through the audit process. Pick that up, and that was corrected and fixed in the financial statements. But if something material comes up during our process, it's under our professional standards that we have to report it to you. So that's what we're doing. Again, the compliance reports, unmodified clean opinions. We looked at approximately 10 programs under those requirements, and all came out clean in accordance with the guidance that's given to us by the federal state entities. As we look at deficiencies, I mentioned we had one. This is really the criteria of deficiencies. A material weakness would be included in the single report. It takes of a higher significance. A significant deficiencies is something less, but required to report that. And then a control deficiency could be communicated verbally to management. So the issue, the actuarial calculation and correction was, we considered a significant deficiency, really something outside of management, because it was done by outside third parties that we had to pick up on. And we worked together to get that remedy. No compliance findings with laws and regulations as we went through the process. And as I mentioned, we had six major programs that we tested on the federal level, and those received clean opinions, and 4 major programs at the state level, and they also received clean opinions. So that's 400 pages summarized in 5 minutes. I wish but it's a lot of work there. The statements themselves, the booklet is probably this thick, but what Michael and his staff and Carlene and the team do is they put together what's called a management discussion analysis that prefaces all the numbers within the report. And if you do look at that financial statement, I'd say read those 8 or 9 pages first. It'll give you a nice narrative of what happened in the city, some of the major events. And so, yeah, we will fulfill our requirements under our standards, and happy to present this report to you tonight.
Thank you very much for that concise report. I was leafing through the full report last week, I think, during a meeting, and it does take a while to get through, but you're correct with the front matter. Yes, a summary explanation, that's very useful. Mr. Gorman, did you want to add to that?
No, I think Mr. Bassett did an excellent job in summarizing the audit. Just on the record, just like to thank my staff, especially in the accounting office, with our chief accountant and senior accountant are here, my staff and management budget. I mean, as Mr. Bassett said, there's a lot of man hours that go into these reports. There's a lot of work during the year that goes on between myself and my staff to ensure that we're in compliance with everything, federal, state, or local guidelines. So that's all I have.
So, Mr. Gorman, do you feel that this presentation is adequate at this time to discuss both items 1 and 2?
Absolutely.
Okay. So at this time, I'll turn it over to colleagues on the committee to see who has questions for these gentlemen. I see Alder Winter.
Thank you, Mr. Chair. Thank you, Mr. Bassett, Mr. Berman. Can you tell us more about what the error in the actuarial assumptions was?
There were some updates that had to do with some mortality tables. Using the most current mortality tables were recommended to be used. So the actuaries updated that. And there was a slight change in the OPEB plan as far as a calculation of a liability. So basically the actuaries do a full valuation every 2 years, and they were taken into the next valuation. But the accounting standards that they do measure it once the change would be brought in, so it'd be most current with that liability. So those are the big ones. And then really with the workers' comp, there's really just a mathematical error, nothing more than just maybe a bad cell, a bad formula or something like that, that's called. And so those two items, I believe, were the main causes.
Thank you. And you said part of your charge is making sure assumptions are adequate.
Mhm.
Does that just mean that the math is
No,
adequate?
no, so basically what we'll do is, as I said, I'm not an actuary, but we have our internal actuaries take a look at the full report. They deal with thousands of them. And they make sure maybe they take a look at your, the key factors would be your rate of return or your discount rate. Obviously, mortality tables are much easier because they're pretty much mandated now. They're public service mortality tables, so that's easier to use. Your rate of return, and those are the key ones that they take a look at. So we take a look and make sure that they make sense, right? So I'm not sure what your rate of return is, but basically you have a table, you take a look at it based on those assumptions to set the rate of return. They measure that. And so really key, mortality drives a lot and the discount rate drives a lot.
And then, I mean, the rates of return assumptions are higher than the historic performance of both pension funds. Is that something that comes up in the analysis that you all do?
It does, but not something, that's a representation of management and they trend it. So the detail of that is probably better asked with the actuarial firm that does it. But we look for a reasonableness of it and we were able to find that it's reasonable.
And then inflation is like such a big part of everyone's life right
The
now.
actuaries will take a look at the inflation rate in the current year too, and they'll come up with the appropriate replacement rate and we'll take a look at that too.
Okay, and so for 2021, so maybe that isn't captured since we're lagging behind a year.
Yeah, there's a couple things that are changed, that will change for 2022, the inflation rate. Your OPEB plan is measured at the municipal bond rate. The municipal bond rate actually went up a point if you compare it from 21 to 22. So there's a lot of things that will drive those numbers that really are outside of our control sitting at this table.
Just so I understand, so you're saying that the municipal bond rate goes up, then the OPEB liability would
Decrease.
decrease?
Yeah. Because the rate of return is higher and they drive down the liability.
Okay. And then with the general fund balance, do you all make any judgment on that? Like, no, it is what it is.
It is what it is, and then
Okay.
maybe let the readers make the judgment.
Yeah.
Correct.
Thank you. Thank you, Mr. Chair.
Thank you, Alder Winter. Next on the queue is Alder Kessler.
Thank you, Mr. Chair.
Before you begin, Alder Kessler, let me just note for colleagues that in case you haven't noticed, if your cell phone is close to the base of these microphones, it might interfere with the wireless signal. So it's best to keep your phones away from the system. Please, Alder Kessler.
Thank you, Mr. Chair. Let's see, hang on. Thank you for the summary, by the way. It does help, especially at night when I'm trying to read 400 pages and start doing the I have a question regarding the retirement fund and what is considered normal as far as funding them that you have seen out there outside of New Haven.
Before you answer, is there a page number you would like to cite?
Page 6, where it says Police and Fire Retirement Fund was 39.76% funded. And I'm just curious what your experience out there is in regards to other pension funds.
Well, quite honestly, I do this work across the country. And across the country, some states have a requirement that you fund the annual requirement at 100% each year. So those funds, based on that state statute, use your 85, 90%, right? So here in the state of Connecticut, you can see funding ratios as low as 10 to 15, up to some communities that are 100. So I wish I could say what's normal. But what I think what is more important as you go forward, because these are historical numbers, right? So you inherit these, they go numbers. I think when Michael presents to the rating agencies and things, what they're really looking at now is your contribution rate and how are you doing towards that arc, okay? So I don't think I answered your question, but maybe a current question as you look at these numbers is how are we doing against the arc? How are we doing against the required contribution? I want to mention one other thing is that this is a gap presentation. So I'm governed by like the government auditing standards to present this, accounting standards to present it this way. When the actuaries come in based on their full actuarial method, that number may be different. And they can smooth assets, they can do a whole lot of things. And I'll go on, and is that just 3 or 4 years ago, they changed the measurement of what we do with fixed assets, okay? Fixed assets used to be measured at a smooth level. Now they're measured at, that ratio is measured at the date as of June 30, 2020, what those investments are as of June 30, 2021. So it's real time and it doesn't take in the smoothing. So as this market goes up like this and this, the market's like this, that number will be lower based on a time. And so just remember, so the actuary is going to use a smoothing rate, which probably is more reflective of what the funding rate is.
Thank you for that. And I guess we're probably in the middle somewhere.
Yeah, I would
That's
guess,
the numbers
yeah, I would
reflect.
think so, sure.
Regarding, so there's tax abatements, I believe it was actually page 80 something in the
Mhm.
whole thing. What does that include?
Well, basically,
Festa, what page are you on?
This one is page 7, note 17.
okay, that's a new disclosure. 2 or 3 years ago, we came up with the GASB came up with a new standard. So basically, that's any properties, and I'll call incentive type activities where you give a tax payment, someone to build a property. So you may have, I don't know, maybe 25, I don't know the number, but it's something that the city comes up with a detailed listing and what's the lost revenue based on that tax payment in the current year.
Yeah, no, I know
Yeah.
that part. It includes just tax abatements, or there was something about enterprise?
Well, if it's a tax abatement, it would include everything where there's some type of decrease in the tax you have to pay based on legislation within the city.
So is that maybe Mike, the
That's
deferral?
that's the enterprise zone, so that area that, I think that's what you're referring to in the audit, is
Yeah.
the enterprise zone.
The tax assessment deferral program,
Correct.
which applies to the whole city.
So abatements and deferral.
It's basically the universe of, as you know, we hear, abatements go through tax abatement, and then we have deferrals based on economic development that goes on for the city based on either local or state statute. So basically what finance has to do along with economic development is provide the information to Mr. Bassett, and they'll put that footnote within the audit.
I just wanted to make sure I understood that it was tax abatement and deferrals, not just one or the other, but it is both. And then just lastly, how, I guess, down and dirty, how nitty gritty do you go with your audit? Do you look at, like credit card statements or, notes that go out, what comes in? I mean, how specific?
So, we have a risk-based audit approach, okay? So what we do is we take everything subject to testing, okay? We obviously do not test every transaction that goes in within the city, but we have a risk-based approach. We go through your balance sheet and our firm, we look at the income statement too. We do a detailed test on the income statement. So I feel we go pretty deep within the audit. We want to get an understanding of your controls. Some instances, we may rely on your controls. In some instances, we do not. If we go through a methodology that says, okay, you have to look at 100 invoices, or you have to look at 100 receipts, or just throwing numbers out there. And every receipt, whether it be $1 million or whether it be $40, has an opportunity to be looked and make sure it's classified appropriately, recorded appropriately, and measured appropriately. Same thing with an expenditure side, which really is your risk side, is your expenditure side, as I go through an audit statement. So again, is it following the procurement procedures? Is it classified correctly? Is it in the right fund? So I wish I could tell you how many things we test, because quite honestly, some other folks do that for me, but I know they're out there a long time looking at that, and I just look at the numbers and there's a lot. So we do pretty thorough job.
I will confirm a lot.
And you don't know off the top of your head?
How many, I don't know. A lot is a broad,
Okay.
but I know it's a
And,
lot.
and do we have anything that you would question?
No, I mean, there are some suggestions we made that don't, I gave you those 3 criteria of when we would report it to you. As we go through the process, we'll make suggestions. And I can say, when we make the suggestions in 1 year, the next year, they're pretty well corrected. So maybe you don't see that because I'm just reporting raw numbers to you. But in the backgrounds, we do a lot of stuff across the country. I try to give that feedback. For instance, like today, we had a 2 or 3 hour meeting to gain some efficiencies on something as we go through the process. So it's just not those final numbers, it's how we get there too.
And I'm sorry, Alderman Festa, and I will also like to say that Mr. Bassett and RSM have always been available. Listen, I don't pretend to know everything, so we have to ask questions, and Mr. Bassett and his team have always been available to answer our questions, which is why I think, we've been coming up with clean audits because they've been available in case, we have a question on how we should book something, is there, question on this expenditure or whatever the case is.
Thank you for that, and thank you, Mr. Gormany, and your team for doing, a really good job in looking out for the best interests of the folks here in the wonderful city of New Haven. And thank you, Mr. Bassett, for your time. Thank you, Mr. Chair.
Thank you, Alder Festa. Before we continue, let me just acknowledge our colleague, Alder Frank Douglas, who has joined us. Thank you for being here, sir. Further questions from committee members of these 2 gentlemen? Alder Winter.
Thank you, Mr. Chair. Following up on the questions about the tax abatements, in the report, it mentions 2 programs, the assessment deferral program and the enterprise zone assessment deferral program. Then it said the total amount of tax payments under the 2 programs was 6.8 million. So to me, that sounds like it doesn't include like abatements that go through LISHTA. Is that correct?
Well, I think it's really defining the word abatement because tax abatements that really come to the tax abatement committee are really individuals who are looking to, who had a hard time and looking for interest to be waived or whatever the case is on their taxes. That's not really a local program or anything that really has to do with development or anything. So I think when you look at that number in the audit, it's really looking at the deferral program as a whole. I think it's just that word abatement.
Yeah, I think it's driven by a GASB standard. So the standard, has defined what that is. There could be other things that are exempt from that standard, but we're just focused on, I think, as Michael said, something that's revenue enhanced or has a purpose to do something in the further. So it doesn't want to include, interest that you forgive or things like that. This is basically, I guess, for lack of a better word, commercial properties that come into the city, and there's some economic advantage for them coming in, an incentive for them to come in. I think is how the standard reads.
Well, yeah, I mean, we do give abatements. We have assessment deferrals and we also have commercial abatements. Typically, it's furtherance of affordable housing.
So I don't think it includes all the deferral programs. I mean, this thing is 2 or 3 years old, so I don't know off my head, but we did a deep dive into that the first year of the standard to make sure we capture the information that's supposed to be required in there. But I don't have the details of it.
Okay. Thank you.
Thank you, Alder Winter. I think one takeaway that I'm hearing from your questioning, which I'm interested in knowing, is as a follow-up coming out of the meeting, is to understand what subset of all the deferment and abatement activity is captured by this number, which is of course in compliance with the standards they adhere to. Because it's actually a number that it's the first time I've seen that number, like an aggregate number of the value of tax abatements or deferrals that we give. We do it for very specific policy reasons, which we talk about all the time when we vote on them. But having a number about what they all add up to is a useful reference point. But knowing what exactly it includes and what it might not include would be a useful piece of follow-up information. So I'll follow up with you, Mr. Gorman, for that. Further questions from colleagues on items 1 and 2? Seeing none, would any member of the public wish to come and testify on items 1 or 2? Is there a member of the public here who wishes to testify on items 1 or 2? And for a third time, would any member of the public here wish to come and testify on items 1 or 2? Seeing none, we're going to move on, and we thank you very much for your time. Mr. Gormley, you're sticking around, I believe. We thank your staff who came and for the work that they do to support this work year in and year out. Okay, so items 3, 4, and 5, we have, they really pertain to the performance of last fiscal year that ended just a few months ago. And I believe that there's material coming our way.
All right, thank you.
And I thank you, Mr. Gormley, for manually adding page numbers to this collection of reports. It's always good to have page numbers. Thank you very much. Please begin.
All right, thank you, Mr. Chair. So I'm gonna go right to the item on the agenda, which is the closeout transfer, which is the pre-audit report, which is also posted to the management and budget page for anybody to review the entire PDF. The 12 pages we have here are really just an excerpt of the PDF file online. But to look at fiscal year 21-22, the first page that you have before you is the city's combined operating results. So remember, when we talk about the fund balance, we talk about 4 major funds. Our primary operating account, which is general fund, our litigation fund, which is our settlements through our litigation settlement committee, our medical self-insurance fund, which is the medical fund which pays for active and retiree medical, and our workers' compensation fund, which funds our workers' compensation program. So when you combine the 4 major funds, you'll see we had revenue of $760 million and expenditures of $743.1 million, which means that the city had a combined operating result of $16.9 million for fiscal year 21-22. So what would that do to our fund balance? As Mr. Bassett mentioned, at the end of the fiscal year 21 audit, our fund balance was $20 million. When you add the $16.9 million, the fund balance would go to $36.9 million for fiscal year 21-22. So again, over the last few years have been difficult due to COVID. But we have been able to steadily maintain the course through the city. And I think this result for fiscal year 21-22 shows a lot of the financial policies that I've tried to implement along with the mayor over the last few years and working with city staff on just various policies. So this is certainly a great beginning point for the city. As I've always said, you know, there's always work to do through the city, but again, this is great results for fiscal year 21-22, especially during the pandemic. So how did we get to these results of $16.9 million? So looking at page 2, and again, I'm not going to go through all these pages, but page 2 kind of outlines our revenues versus expenditures for the general fund. So what this does is it kind of aggregates into the various categories that we have of property taxes, license permits and fees, rents and fines, and other revenue. And then all our state grants as well. What you will notice on this is on the revenue side, we did not use any American Rescue Plan funding for that result, on the revenue side. So again, I think that's important, to note. As you know, ARP funding could be used for revenue replacement, but again, we had favorable results for 21-22. On the expenditure side, we see a roll up of just the major categories. So again, we roll up, every department has a category such as general government, which is offices like the mayor's office, finance, assessors, and then again, we have public safety, which is police, fire, 911, human services, education, so on and so forth. So again, when you look at the last, when you look at the 21-22 audited results, actually, I should say pre-audit, I need to correct that, but the pre-audit results, you'll see general fund had $14.8 million as an operating surplus for the fiscal year. So looking at page 3, which kind of just shows our tax collection results for the fiscal year. So the one thing I do want to highlight on this page is we did collect $7 million in additional tax revenue for the fiscal year. But surprisingly, a lot of that was delinquent taxes. So that was really individuals catching up on back tax bills. So when you look at the last column, you'll see out of that 7 million, 4 million, rounding the number, is due to delinquent collections. So that's certainly a great story. We do budget conservatively on delinquent collections, just so the board knows, because every year the balance is fluctuating up and down. Taxes come off, some come on, they don't always balance each other out, but again, taxes were $7 million over budget. If you look in the middle of the page, our tax collection rate was 97.91%. So up from fiscal year 21, which was really the year of the pandemic. So again, tax collection certainly did bump up for fiscal year 22 from a collection standpoint. Page 4 kind of just gives an outline of departments, surpluses or deficits. So all I'm going to do is I'm going to touch on the major departments for the city. So again, our police department, you'll see they ended the year $1 million as a surplus. So again, that takes into account all the overage and overtime, which was a little over $3 million when you compare the budget of overtime. But again, we had a lot of vacancies. I mean, we make it no secret, you see it in the monthly reports, we had a lot of police vacancies, which is where a lot of the overtime came from. So a lot of the salary attrition for police was able to cover the overage and overtime for the department. Unfortunately, fire was sort of the opposite. They had more overtime than anticipated for fiscal year 22. They had vacancies throughout the year, but just not enough in salary attrition to cover the overtime. Our Board of Education came in right on budget for the fiscal year. So that's actually the last line on the page, a small modest surplus of $47,000. Employee benefits. So a lot of that is due to, as you know, the general fund makes a contribution to the medical fund, which we'll get into on the last page. You know, we did see increase in medical contribution in fiscal year 22. As Mr. Bassett mentioned, you know, 117 million for fiscal year 21. We were at we were at 128.4 for fiscal year 22. So you can see, and we talked about this at the monthly finance meetings, you know, we just seen people going for more medical appointments. We did have some one-time COVID expenditures in there still. it's just the medical costs that we've seen going up, from vaccinations and just starting to come out of the pandemic and people getting elective surgeries, going back to the doctors. Drug cost was another, area that we've seen in medical. So we did have a few good years of COVID where we've seen medical kind of flatline and, but then again, we also knew there was gonna be a point where it did spike up. So what we're doing is looking at the new baseline of medical, like I talked about at the last finance meeting. Debt service was really due to, we did do a refinance, which was favorable during the fiscal year. Again, we did not extend the life of any bonds. It was really just savings and interest rate, taking advantage of the market at that time. So again, that yielded us 2.3 million in savings. No secret, we have a ton of vacancies in the city. A lot of the savings that you see on this page are, personnel savings from just different vacancies that, departments had throughout the year. So, but all in all, $3.4 million is what we saved on expenditures for the fiscal year. The last area I want to go to was what I really touched on, which was medical. So if you look on page 10, medical, as I mentioned, you'll see in the fiscal year 21-22 expenditures, we spent $120.4 million. So again, that was about $11 million more than the previous fiscal year. So remember, this medical fund pays for both active and retiree health care costs. So I touched on it a little bit, but it's just, catching up with the previous years. If you look in fiscal year 19-20, we spent only $111.8 million. That was really when COVID started. See that's really where a lot of the savings on medical came in. But again, that was really the height of the pandemic. There was really not much going on from a medical care standpoint. And then we started to see it creep back up in fiscal year 2021. And then, like I mentioned, fiscal year 21-22 is really where we started to see the claims hit. So we're really looking at, what's the new baseline for the city? Because I think that's going to be important going forward from a budgeting standpoint on what we're looking at medical costs. We have our consultants looking at it. Again, with Mr. LeGrandi retiring, that have kind of put it talk to what we're looking at with medical, because that was really his area. But again, we are certainly looking at it from a financial standpoint with the consultant going forward. One page that was not in here, I do not know how it was missed, but on the revenue side, I know you don't have it in front of you. Again, I mentioned property taxes. Parking meter receipts was right on budget. So if you remember, in the beginning of the fiscal year, we were actually projecting a deficit within that area. Building permits was $1.6 million above budget, and real estate conveyance tax was $1.3 million above budget. So again, those two areas really recognize the economic development that's going on in the city. Building permits and real estate conveyance tax really are linked to commercial property sales and development that's going on. During the pandemic, we really did have good economic development still going on throughout the city, so we were able to meet the building permit budget and exceed them the last few years. So that's a good story. We did see some drops in revenue. One of our major local sources that was dropped was that we've seen a drop in was the parking tax. Again, that was a combination of workforce, plus just the number of tickets we were issuing. So we're hoping that that bounces back during this fiscal year. I think, through the approval of this committee and the full board, we did lower that budget going into 23 to meet realistic expectations that we were seeing over the last few years. So, and I believe on the revenue side, that was everything else pretty much came in on budget. Obviously, when we were compiling this budget, we added in the 53 million for the anticipated state aid. And again, that was also a function of the timing of when our budget is due versus the state budget, plus the negotiations with Yale. So that really did help us. So thank you to the state legislature and everyone else who definitely worked on tiered pilot. That was certainly good for the city, and the negotiations with Yale and the additional revenue that we had through the voluntary agreement. So again, as I mentioned prior, or didn't mention, but often I'm asked, how do we forecast? Because during the season, beginning of the fiscal year, you often see a deficit in the monthly reports, the last few years. In fiscal year 2021-22, we actually seen a slow beginning to the fiscal year, which is why you've seen the deficits in the monthly reports. I mean, the deficits were as high as $15 million, which included $5 million from the Board of Ed. We really did see a strong half of the second year, a strong second half to the fiscal year for 21-22, which really contributed to these results for the city. So I believe, Mr. Chair, with that being said, I am concluding my presentation on I'm sorry. This is an actual transfer. I should
Yes.
talk about the transfer.
We'd be grateful if you would. I believe
So,
that's page 12 of yours.
Page 12. So, through the city charter and code of ordinances, we need to, in various sections of the code of ordinances, we need to eliminate negative line items within the end of the year budget. So what you see on this page is we did it a little bit differently this year. We actually aggregated all the negative line items per department, and we actually took all the positive line items per department, kind of aggregated them by department to what you see on this page. So essentially, out of the $606 million budget, we had almost $48 million of negative line items. So again, remember, we do a line item based budget. There are about 7,000 lines in there. So this is the accumulation, including the Board of Education, of all those line items. But again, we ended the year in a positive result. So we were able to offset those negative line items with positive line items in each department, essentially bringing the net result to 0. So that is what this transfer accomplishes. It's really just eliminating each negative line item in each city agency. So I believe with that, I have covered everything on this transfer.
Just by way of clarification, Mr. Gorman, before I go to colleagues, is it accurate to say that the transfer from shows departments that had some positive lines aggregated, rolled up to the department level, and when you add them all together, it's $48.8 million. And then you distribute those positive line balances to the transfer to lines. So that it all comes together, and then it gets sprinkled across all those lines. And the end result is that it all comes to 0.
Correct.
Thank you. Okay. So thank you for that presentation. Questions from colleagues? Alder Festa.
Thank you, Mr. Chair. Mr. Coleman, do we ever do assumptions if we were fully staffed, where we had no vacancies, just to see where we are? with the overall budget, because a lot of the savings here, for example, the police department, have to do with vacancies. But if we were fully staffed in the police department, we'd be seeing a whole different number there. Do we ever look at assumptions just to say, wow, if next year we are fully staffed, this is where we're gonna be and what we need to watch out for, even if it's like a 5-year assumption?
Absolutely. So that's what we do during the budget cycle. So when we submit the budget, when you look at, for example, management budget, I have 5 positions in there, right? When we do the budget, we don't do any assumptions that we're going to carry 3 vacancies within that management and budget line, right? So when you look at the budget, that's budgeting as if we're going to hire all those positions. In regards to the police department, we do look at the assumptions. My office works with departments on a monthly, depending on how big they are, or quarterly basis to see where they're at. And with the police department, we do look at when are you looking at a class? When are you looking at promotions? Things like that. But again, I think and one of the things we also look at with the police department is if we hire this amount of folks, when is the overtime going to come down, right? Because you have to kind of look at the personnel savings and then see all the other driving factors in the department to see what offsets or is anything going to be higher. Obviously, we've talked at length prior about, when you do a class, how long it takes to offset overtime, so on and so forth. But I think a lot of what your question covers is when we do the budget process.
Yeah. And then regarding, Board of Ed, it looks like they were able to budget their, as you mentioned, they were right on with their budget. But does that have to do with vacancies as well? Does it have to do with the changing circumstances even on the Board of Ed with teachers, shortages, et cetera?
I mean, the Board of Ed is a complex entity over there, but it does have to do with them maximizing grants. They do have attrition savings that they have regarding teachers and other personnel that they have vacancies. So it's similar to us where it's an accumulation of things that they have, but absolutely it affected the outcome that you see here.
Okay, and again, you just worry about the future with some of the budget numbers. And then just lastly, I know you said that you have someone that's gonna be looking at our healthcare, the number of 128 million for fiscal year 21-22, and this is on page 10 of the packet that you gave us. It's still very much higher than even what, let's say, is the typical pre-COVID. Is that, you mentioned, the increase in health costs and, but is it also due to maybe folks being sick? Does that drive the number up as well?
Absolutely. I mean, so one of the things that you really have to look at also is pre-COVID, the driver and the percentage year over year, right? So what we look at, what we were looking at prior to COVID was this normal increase in medical costs, and any year could be between 4 and 6% year over year. So again, one of the things you have to look at is pre-COVID, if that trend continued with this 128 million, be within that 4 to 6% number. So that's one of the areas that we're looking at. Again, as I mentioned, some of that $128 million was due to one-time COVID costs, right? So we have to also take that into consideration.
What do you mean by that?
So there are certain medical costs that we have to pay related to COVID, just from us being self-insured and having it related to our employees. So again, if I have if I have something related to COVID, it may cost, throwing out a big number, $500,000. That's what we consider a one-time cost. That's not going to be recurring in the next fiscal year. So that's one of the things our medical consultants are taking into account as well. So we're really looking for the new baseline of, what we think medical costs are, and is it still gonna be that 4 to 6% year over year? Or is it gonna go higher? As medical costs rise for not just us, but everyone. So,
Oh, yeah. Do you know when that report will be completed?
that's something that we take a look at internally, as we go into the budget cycle. I can certainly keep this committee updated as we do monthly reports, but it's ever changing. It's not really a report, but it's something that my office, in conjunction with HR, because they manage benefits, really looks at on a month or bi-monthly basis. But I'll be more than happy to keep this committee updated with any information that I have.
Thank you. Thank you, Mr. Chair.
Thank you, Alder Festa. Further questions from colleagues? Alder Furlow.
Thank you, Mr. Chair. Thank you, Mr. Gormley, for such a thorough report, as always. I do have a question regarding the motor vehicle and the collection rate. And I apologize, I have the wrong glasses, so I can't really see these numbers very well. But it looks like the rate is 97, I think that's what you said, 97 point something percent. I'm on page 3. Final collection rate, 97 with a couple other numbers behind it. Then I'm looking at the motor vehicle amount that's pulled in. It looks like 16 something, 9 perhaps. So I'm kind of seeing the numbers going across. It looks like it could be down about 0.5%, which looks like it might be, if that number is 16.9, maybe it's 16.6. If y'all help me, please. So it looks like it's about 80,000 less if it's running an average. If you look at the average of the previous years. So my question is, do you think this amount is COVID related because of people being out of work, office not really being open, having to pay online, or is it because we're not towing people who are delinquent in taxes?
Well, I think it's a combination of things. When you look at that number, that is definitely driven by the levy, the motor vehicle levy that we have. So if you remember, motor vehicle values went up. But the collection rate went down, and that was due to us seeing less motor vehicles on the property tax, on the motor vehicle rolls for the city. So again, as we see less vehicles on that roll, that's less money that we're collecting. The towing that and other mechanisms that we use are really done, that would count really towards the delinquent collections, because we don't, when that program was in place, that wasn't done until your taxes were delinquent. So the motor vehicle column that you're looking at is basically when it comes on the tax roll due July 1st and January 1st of each year, or in January or July. But I think we just seen less activity related to motor vehicle, which is why you see that number down. And then when you look at the collection rate a little bit further down in the page, you'll see it's down from 88.6%. It's down from 88.6% to 87.4%. And then supplemental motor vehicle is down as well. So that's motor vehicles that are registered after, so someone purchases a car, it's put on the motor vehicle rolls due in January, but we've seen less activity that way as well. So I think it's really just due to the motor vehicle roll and seeing less cars on that motor vehicle for that year.
That's very interesting. Okay, thank you. Thank you, Mr. Chair.
Thank you, Alder Furlow. I saw Alder Walker Myers, and we'll swing the microphone over to her.
Thank you, Mr. Chair. Mr. Gormley, do we have a way to, and this question probably isn't for you, but I'm gonna ask it anyway. Do we have a way to track motor vehicles that are not registered here, right? For instance, in my neighborhood, I saw a car, and Alder Hurdle's question prompted this question, but I saw a car, right, with out-of-state plates, and I'm like, okay, but I mean, I saw that car for like 2 months. I know they don't live out of state. So like, is it a way, do we have a mechanism to actually track that, or we just have to rely on people's honesty, I guess?
So it's a combination, and that's a great question, President Walker Myers. It's a combination of what you said. So we need people, when that happens, to let us know about it, through the tax office, but we do also have consultants who do that. Who, they work statewide. There's only a few in Connecticut. So again, we're competing with other cities and towns for their services as well. But we do have vendors who go out and look at our tax rolls. They look at motor vehicles. They do what we call audits on the motor vehicle roll as well. So we have a combination of ways that we look at that. I wish we could say we could get more aggressive and look at that, but I don't have a mechanism at this moment to do so. But we are trying to catch those out-of-state vehicles.
Thank you, and thank you, Mr. Chair.
Thank you, Alder Walker Myers. I know that Alder Festa wants to get on the queue again. Anybody who hasn't been on the queue yet will go with first. Alder Winter.
Thank you, Mr. Chair, and thank you, Mr. Gormany. Just following up on that last question, when you say there are consultants, we're currently engaged with a consultant to audit what exactly? What is the relationship we have with that entail?
So we do have a vendor that works with our assessor's office and our tax office, that looks at motor vehicle and, other areas related to that particular piece of the tax roll. So they will do audits when there's a discrepancy or whatever the case is with the assessor's office, or when we get a tip on, out of plate, vehicle. So we do have a vendor that we work with, currently that helps out the assessor's office. I mean, again, another office that has about 3 to 4 vacancies in it at the moment. So, that we rely heavily on that vendor to kind of help us out with this.
And they would be doing out-of-state plate enforcement, like
Their
president.
contract includes, motor vehicle and other areas that, I'm looking at it right now. So personal property, some motor vehicle. So yeah, so some areas of motor vehicle and things that this vendor would work with, but, again, we're also looking at doing an RFP for an all-inclusive vendor as well. Unfortunately, again, not a lot here in Connecticut that actually do the work, so it's a little tough to get that one vendor who focuses solely on motor vehicles. But again, the assessor's office works on motor vehicles and just other audits, so we have to rely on outside parties as well.
And it looks like the motor vehicle collection rate, even though it hasn't changed much from 2021, is down almost 5% from 2018. I'm not sure I understood your response that has to do with the size of the rolls. Does that have to do with? Yeah, is there an explanation for that?
So again, it's just like, we have a role for real estate, we have a role for motor vehicles. So everyone who is in New Haven has to have a motor vehicle registered on the tax roll, right? So a lot of the time we'll see, just like real estate or personal property, things come on and off the tax roll, or, appeals or whatever the case may happen. So what you're seeing is a decrease in, what we call the actual tax levy, which is what dictates how much we collect in taxes. So if that amount changes for whatever reason, due to an appeal or a car coming off the roll, you see that collection percentage going down. So there's a few different factors that go into why that collection rate decreases.
And what are the factors?
So again, if you appeal,
Yeah,
the tax levy can go down, right? So that will decrease the actual percentage because you were projecting to collect a higher percentage. Now there's an appeal, so that number is going down. If you have 3 cars, if our original tax roll has Walter Winter with 3 cars, you come to the tax office saying, I only have 1 car.
Right.
Well, that's more value now coming off the tax roll, which will then decrease the amount that we collect plus decrease the percentage. So so it's factors like that that we have to look at, when it comes to the tax roll for motor vehicle.
So it's not concerning then that it's gone from 93 to 87.4? It's like mostly due to there being vehicles on the rolls that shouldn't be on the rolls, and due to like a larger number of appeals?
I mean, honestly, motor vehicle is just one of those areas that we don't really control. I mean, even the book value of a motor vehicle is not set by the city. It's set by the NADA. So there's also certain factors that are outside of the city's control that we can't, handle as well. Is it concerning about the collection percentage? Absolutely. Anytime I see any of these percentages go down, because that's less revenue on that category that we're collecting. But again, I think on motor vehicles, there's a certain area that we control and, certain factors that we don't control.
Okay. And with the health baseline, is it fair to say that the range of values you're looking at are a growth rate of between 4% and 6%? Is that accurately catch?
At this moment, it's probably like 5 to 6%. I'd almost take out that 4%. But again, we're looking at, with the city in our fiscal year, we really look at the first quarter, right? Generally, after the first quarter is really when we start to develop a lot of the baselines and everything that we use for our projections. So that would certainly tell us a lot on where we're at, as we go into the month of October and beyond.
And then I can't seem to find the page, but on the debt service page, there's an other contractual line of 600,000. Sorry. Somewhere here.
Page 5.
Page 5. What is that?
So other contractual services are all the consultants, the financial advisors that we pay when we do refundings or any type of borrowings. We have a lot that prepare our official statement and other documents that go out through the rating agencies and are posted on the public website. So again, we have about five financial consultants and other individuals that help myself and my office prepare all the documents. So that's what that cost is.
And we hadn't budgeted anything for it this year, or this last year rather?
So correct. I mean, that was kind of a practice that, so in prior years, when we go out to bonding, we would charge city departments, it was right there, a certain percentage of their bond to pay for these costs. I think in looking at what, how we borrow money and trying to maximize capital, the last few years we tried to pay for it out of the general fund as long as there are favorable results, which help on the bonding side because then there's more money to do sidewalks or whatever else.
Right.
We're not charging them that percentage to pay for these costs. In this fiscal year, in the next budget cycle, you'll probably see a budgeted line item for that, so we can continue that trend of paying it out of general fund, which actually saves us on debt service and a bunch of other areas. And again, leaves more money for the capital budget. But again, we had a surplus in debt service, so we were able to absorb that $608,000 for those costs.
Thanks, that's helpful. And then one last question. We have a lot of zeros on operating subsidies, and Tweed should soon be a zero. The boathouse, is this still, they're a little bit above their budget of $50,000? Do we have any visibility into how they're gonna phase their operating subsidy out?
So if you remember, I'm not sure, I just know it was during 21-22, at some period, this committee and, the full board approved the fees for the boathouse.
Right.
So the concept of the boathouse is once those fees are really up and going, it's really supposed to be a self-sustaining fund, right? So I think even though this is a small modest number, it was really to start helping out the boathouse, but as we get into that in the next few years, I mean, I can't promise anything, but
Yeah.
hopefully this number will disappear from the general fund side because it's self-sustaining.
Thank you, Mr. Chair.
Thank you, Alder Winter. I have two colleagues who have not yet gone. I'm going to go to them next, and then Alder Festa. So Alder Douglas and then Alder Santiago.
Thank you, Mr. Chair. I'm going to excuse myself from this. I want to make a comment, but I think I better wait and hold that directly to the tax abatement committee. Thank you.
Thank you, Alder Douglas. Alder Santiago.
Thank you. I want to take more sample as well. Thinking like, that license plate, out-of-state license plates. For him, we have a lot. My question, actually, I have two questions. First, are we making any money with that consultant? No.
So I need to, and I may have been mistaken, but I will check with our assessor's office. But that consulting contract on their scope of services, I know there was a scope, I think the consultant has to do primarily with personal property and some motor vehicle, but a lot of these contracts that we have, because again, as I've been acting controller, I've kind of wanted to do more audits and make sure we're getting the bang for our buck, but most of these contracts are on a percentage basis, right? And that incentivizes them to go out and look for those plates. So like on this personal property contract, it's a percentage base. It's not a fixed fee that we're paying just so they make money and they don't do.
So it's like this one, the more you make, the more you get, the more you make.
Exactly.
Now, how is it enforced? Because if I'm not mistaken, how long do a person have before they have to change the plate? Is it 30 days or 60 days?
60.
That's a good
Right.
question.
I think it's 60 days, if I'm not mistaken. Do they go back to the, do they go at night, or the cars, they can't follow a car all during the day? They do it at night? I mean, there's a bunch of questions I got. Do they go back to the same address and make sure the car is registered? How does it get enforced?
Yeah, so again, this is a contract that's primarily with the assessors and the tax office. I wish I could, and again, it's primarily personal property based. And we were in the process of looking for the RFP for the motor vehicle vendor. I know this vendor has helped us out some, but again, they're primarily not motor vehicle. But I think I will, through the chair, trying to get you a more comprehensive answer than I have. Because again, I'm not.
You'd like to make that request to the chair?
Yes, sir. Yes,
Alder
sir.
Santiago, granted.
And just for comment, and again, Mr. Hayden, a lot of the out-of-state places that I see are pickup trucks that are construction. And they're making money. So, I mean, I just a comment. So please, let us know how that gets done, and there's a lot of them out there. Thank you.
Absolutely.
Thank you, Alder Santiago. We are developing a theme here, and it's related to automobiles with plates that don't say Connecticut. Okay, so now we're doing a second round. Let me just see if folks who haven't asked questions yet want to ask. So we'll do a second round of questions, starting with Alder Festa and then Alder Furlow.
Thank you, Mr. Chair. Just, are we considering the mill rate that has dropped for fiscal year 22-23 already? Because that number is going to drop even further with the mill rate being lower for motor vehicles. We're back on the clock.
So again, I think that's really, we're actually, I mean, it's hard to say right now that we are actually in budget cycle in my office for the next fiscal year already. I can't believe it. It's so quickly. So honestly, Alder Festa, that's stuff that we're analyzing right now. As you know, we did a 2-year phase-in. So again, there's a lot of factors that go into that, right? The mill rate, obviously, the second half of the value coming on. And again, when it comes to motor vehicles, we don't set the value. So it's gonna also be, what does an ADA do, right? Because the last few years, they've gone up on values, especially used cars. So unfortunately, we just don't have any indication on what they're gonna do with motor vehicles.
But we do need to consider that mill rate change.
And I will say, again, remember, the state has set the motor vehicle rate, right? So they have a motor vehicle rate of 32, I think, 0.46 or something like that, a weird number. So we couldn't go above that number anyways, right? That's the maximum number. So again, an ADA depends on what they do, and then again, depends on what the state does if they keep the same legislation on setting the motor vehicle mill rate.
And then regarding, the out-of-state fleet, we do have ordinances in place to address this. And if those construction trucks are here and staying overnight, more than 2 weeks, they're supposed to register their car with the city. So even if I have, let's say I have out-of-town guests that come in and they're going to be staying longer than 2 weeks, they're technically supposed to register their car or tell us, and they're supposed to pay a certain fee. And of course, out-of-staters, especially since we have universities and colleges with out-of-state plates, we need to probably stress to also those institutions to make sure that their students and faculty know that if they're going to be here out of state, that they need to register their cars, since they have a responsibility as well to help us. Thank you.
Thank you, Alder Festa. We're learning a lot about vehicles tonight, and we're learning that there's more to learn. Alder Furlow.
Thank you, Mr. Chair. Let's do one more motor vehicle question.
Please, take the microphone, sir.
Thank you. Just very quickly, when does the city plan to begin towing again for delinquent taxes?
I do not have an answer for that. That is internal discussions that would have to happen, with the mayor's office. I just don't have an answer for that at the moment. With you, it's been a subject that's been brought up, but not has been definitively decided or anything like that. So I think we have more discussion from an administration standpoint to kind of look at that.
And we're also not booting.
Correct.
Okay, great. Thank you, Mr. Chair.
Thank you, Alder Furlow. Looking for further questions of Mr. Gormley on these items. I don't see any. I'm just going to say two things quickly. One is the salutary effect of so many vacancies was a reduction in expenditures, which helped the city's overall financial statement. The possibly less well-measured negative effect is a decline in services. For example, if you have a bunch of teachers who are not there and you're replacing them with substitutes, or maybe not even replacing them with substitutes, the quality of the educational experience goes down. If you don't have as many boots on the ground in Parks and Public Works, just using that as a random example, there are probably fewer issues that they're able to handle. And maybe we see those items and see conflicts, those lists grow. So I just want to note that there is a positive to be pointed out in terms of vacancies, but then there's also trade-offs. So we need to, and that's probably not as easily measured as the dollars and cents. My question, Mr. Gormley, is do we still have the same healthcare consultants?
Yes,
Do you remember the name of the firm?
Gallagher Associates.
Gallagher Associates, correct. All right. Great. That's what I wanted to know. Further questions on these items? Seeing none, let me see if there is a member of the public here who wishes to testify on these items. And for a second time, would there a member of the public wish to testify on these items? And for a third time, is there a member of the public here who wishes to testify on these items? Seeing none, we're going to move to the final portion of our meeting, 6, 7, 8. A brief word about the most recent monthly and then about the parks fee requests. Mr. Gorman.
All right, thank you,
And Ms.
Mr.
Barbero, if
Chair.
you wish to come forward, you may come forward now.
Yep, I was just gonna ask if Ms. Pompeo can come forward. I think, the August, so we're gonna skip July and go right to the August monthly report. Again, as I just mentioned, we're really get a handle on the fiscal year after the,
We're looking for additional packets. And we'll just get that done before we begin. And one for Don, thank you. Everybody have a packet? Thank you, Alder Santiago, please.
so as Ms. Bombero hands out for the fee schedule, again, the areas that we're gonna really be focusing in on during the fiscal year, after the first quarter are our major areas. On the expenditure side, we're gonna be looking at police and fire overtime, medical health care costs, and, workers' compensation. I think those are really our main areas of focus. Again, also working with the Board of Education CFO and seeing how the Board of Education is trending for this fiscal year. So those are really our main areas of concern on the expenditure side that we're really gonna be focusing in on. On the revenue side, we're really gonna be looking at our local revenue sources such as, meter tax, again, in fiscal year 21-22, that was something that did come under budget for that year, so that's something we're gonna be paying attention to. Interest on our bank accounts, again, while a small modest budget in comparison to the overall budget, we are paying attention to that as well. We are expecting all our state grants to come in, including tier pilot for the fiscal year, so no change on that. Building permits and talking to our building official, we are expected to receive the building permit number for fiscal year 21-22, and we are trending about the same as real estate conveyance, and talking to the city clerk's office. So again, overall, I think we really get a better sense of where the fiscal year is trending primarily around October, November. So you'll see these monthly reports start to fluctuate, hopefully in the right direction. As we continue to see the trends during the fiscal year, we'll make adjustments. Again, forecasting any time period during the fiscal year is more of an art and a science, right? I mean, we all know one thing can throw a projection off the next day, trending in the right or the wrong direction. So again, we'll continue to publish the monthly report. And right now, through August, we are looking at balancing the fiscal year. But again, very early on in the fiscal year, we'll continue to look at tax collections, local revenues, and again, on the expenditure side, police, fire, the Board of Education are our major agency costs, and medical again, as we just discussed, is certainly an area that we're going to look at and see where we're trending as far as the baseline for fiscal year 22. That's what I have on the August monthly. Again, very early on in the fiscal year, so we'll continue to keep an eye out on any major changes that we see.
Thank you, Mr. Foreman. I think in the interest of time, we're going to move right to the presentation about the proposed fee schedule change. But if colleagues do have questions about the August monthly, we'll address them momentarily. Ms. Bombero, name and address for the record, please.
Sure, Rebecca Bombero, Deputy Chief Administrative Officer, 122 West House Ave, New Haven, Connecticut. So first, I wanted to apologize to you. I had thought I had successfully communicated this in June for your July meeting, and apparently it got lost in the shuffle. And since I had to go before 2 committees before I came to you, kind of forgot that I wasn't there. So apologies when I went to pull for the new season. I realized it had not been finally approved by you guys, so I'm here tonight. So before you, you have an update to the fee schedule for the ice rink. As you guys recall, last year was our first year with a new operator at the rink. They started right on contract right as the season started. So we wanted to get a good year season behind us on experience before we reviewed the fee schedules. We did a market analysis, so you'll find that on one of the two sides of the sheet that was added to your packet, which shows when we did this in May, what the market rates were for all of the area rinks, both locally and throughout the state. And you'll note that we're below market, so working to update to reflect that. The initial proposal, the operators helped work on, it was vetted by the Ice Rink Advisory Board, which is made up of members of the community, of the board, and of the Parks Commission, as well as the stakeholders. And then it was reviewed by the Parks Commission at their June meeting, before I thought I submitted to you guys for your review. So just going through the changes, an update to the resident rate to get more in line, still providing a discount. What we are finding is a lot of people are taking advantage of the resident rate. It'll be a team of mostly out-of-towners, and they find the one guy that's from New Haven that puts in the resident rate. So those will be verified by Yard using standards similar to what we do for our rec leagues to ensure that those booking the resident rate are really residents. For birthday parties, it'll just be done with your license, what have you. But want to get a handle on that. The non-resident rate, we're moving up to equal to market. And you have an extra column in there. We used to be at a 50-minute for ice time. The market's really 60 minutes. I think we've been at 50 minutes for over 25 years. That was really one of the things the operator wanted to correct. So we moved our current rates to 60 minutes to make it an easier comparison for you. We're maintaining our public school rate, which is the rate that you guys put for Albertus in their contract. Keeping this field trip rate for the skate rental there. Keeping our skate rental rate. We're adding a new fee for skate guards. Remember, we used to have those rinky-dink milk cartons. We invested in some actual skate guards, so now we need a fee for those. So that fee will be in there. And the operator also suggested changing the child's rate. So giving all kids under 5 skating free with the adult that's accompanying them, because no little kids really go on the ice by themselves, and just moving kids in line with adults, because a lot of them take up the same amount of room on the ice as the adults. Maintaining a rate for seniors, maintaining our skate rental rate again. And then we're doing a blended rate for the party room, just to make it easier for those parties that take the party room but also want exclusive use of the ice. So you can rent the party room without exclusive use of the ice for an open skate. But if you really want, to go big, you can rent the whole rink with the party room. And then there's the per child celebrate rate. So I'm happy to answer any questions you might have.
Thank you very much, Ms. Barbero. So we have 2 items before us that we can ask questions about. One was the August monthly. We heard about that briefly from Mr. Gormley. And of course, we have in front of us this proposed and amended fee schedule for the Ralph Walker Rink. Questions from colleagues on either of those 2 items? Alder Furler.
Thank you, Mr. Chair. Thank you, Ms. Bombero, for this presentation. Just a very quick question. Why only a $50 increase for non-residential exclusive use of the ice?
Because it got to line with the market, which was $475. So our local competitors, Milford, Northford, et cetera, were at $475.
They're at $475?
Correct.
Okay, so now I'm confused.
It's the 200 for the party room, plus the 475 for the exclusive use of the ice. And that brings it to 675.
I got it.
Oh,
Thank you.
sorry, I thought you were referring to the top one, yes. The party room plus residential or non-residential.
Okay. Thank you, Mr. Chair. Thank you, Mr. Chair.
Further questions from colleagues? Alder Santiago.
Are we, thank you, Mr. Chair. Are we deleting the children under 18?
We're changing children to two categories, under 5 free, and then other children we're getting merged in with adults.
Does it propose delete, that means,
So we added under 5 above, and then the kids moved down with adults.
thank you.
Thank you, Alder Santiago. Further questions on either of these two items, the August monthly or this proposed revision to the Ralph Walker user fee schedule? Seeing none, before you go, let's make sure that no one who came here for this meeting wants to ask questions. Are there any members of the public who wish to ask, who wish to give testimony on these items? And for a second time, are there members of the public here who wish to testify on these items? And for a third time, are there members of the public who wish to testify on these items? Seeing none, Alder DeCola.
I move to close the public section.
Second,
The motion to close the public portion has been made and seconded. Any discussion of that motion? Seeing none, all in favor say aye.
Aye.
All opposed say nay. The public portion is closed. And before I entertain any further motions, let me just thank Mr. Gormley for being here with us for this meeting, and your staff who were here, Ms. Bombero, and of course, our guest from RSM, Mr. Bassett. Having said that, it's the time to make motions. Mr. Alder DeCola.
I'd like to move item 1 as a read and file.
second,
There's a motion to recommend that the board read and file item 1. Discussion of that motion. Seeing none, all in favor of this recommendation, say aye. Aye. All opposed, say nay. Motion carries. Alder DeCola.
I move item 2 as a read and file.
second,
Motion has been made and seconded. Discussion of this motion. I will just say, if there's no other further comments, that it is good to see positive fiscal results, and it is also good to see a sound bill of health from the folks who audit us and make sure that we're in compliance with state and federal reporting requirements. Further comments on item number 2? Seeing none, all in favor say aye.
Aye.
All opposed say nay. That will be recommended to the board as a read and file. Alder DeCola.
Thank you, Mr. Chair. I move item 3 as a read and file.
second,
This is the monthly for May 2022. Any discussion? Seeing none, all in favor say aye.
Aye.
All opposed say nay. Motion carries. Alder DeCola.
Mr. Chair, I move item 4 as a read and file.
second,
Discussion of item 4. Seeing none, all in favor say aye.
Aye.
All opposed say nay. Motion carries. Alder DeCola.
I move item 5.
second,
The motion is to give a favorable recommendation to this ordinance amendment, the year-end transfers. It's been seconded. Discussion of this item. The numbers add up, which is always good. Further discussion beyond my brilliant comments just now? Seeing none, all in favor say aye.
Aye.
All opposed say nay. Motion carries. Alder DeCola.
Mr. Chair, I move item 6 as a read and file.
Alder DeCola, do you mind moving 6 and 7 together?
I will do that. I move item 6 and 7 as a read and file.
second,
Items 6 and 7 have been moved together. Any discussion? Recommending that they be read and filed. Seeing none, all in favor say aye.
Aye.
All opposed say nay. Motion carries. Alder DeCola.
Mr. Chair, I move a favorable recommendation for new rate fees for Ralph Walker Rink.
second,
Motion's been made and seconded. Discussion of this item number 8, the updated user fees for the Ralph Walker Rink. Alder Front.
Thank you, Mr. Chair. It seems reasonable, and I encourage colleagues to vote favorably.
Thank you, Alder Front. Further comments? Alder DeCola.
Yes, I agree with my colleague, and this rink has produced great joy for many residents. And we get the Chiefs Cup in our own rink now instead of going to Yale. So it's a positive thing for the whole city. Thank you.
Thank you, Alder DeCola. Further comments on this? I'll just say for the record that the city made significant investments in improving that facility, and I think these rates are in line with the market. It seems reasonable to make these changes. Further comments? Seeing none, all in favor of a favorable recommendation for number 8, please say aye.
Aye.
All opposed, say nay. The item carries. And before a motion to adjourn is appropriate, let me just note for the record that there's some follow-up that Don and I will do around the questions of item number 1 and 2 around the scope and scale of the deferral and abatement items in the report that we saw. I made a note of it, Don, so we'll discuss it. I'm just saying it for the benefit of the record. He will get back to us on that, so we'll follow up with him. And then there's, I think, line of inquiry around the consultants that the assessor's office used to help increase collection rates for delinquent vehicles and other things that I think Mr. Gormley said he would provide more information on. And I think we'll be glad to follow up on that. Seeing no further comments, Alder DeCola.
I move that we adjourn.
Second.
Any discussion of the motion to adjourn? Seeing none, all in favor say aye.
Aye.
All opposed say nay. The motion carries. We are adjourned.
Take away the interest.
Very good. No, that's okay. Because I asked you to do one by one.
Why don't you say no? Yeah. People taking advantage. How about the league? She keep coming. I mean, she was told no, but she don't stop. She told she coming, but she finally got it to not come.
And that other issue, that's rampant.
Yeah, it's kind of hard to.
I got 5 or 6 cars.
It's kind of hard to monitor it, but I know this one I'm talking about is not a school district.
Maybe. No, there is a 6 but that's,
For all of this.
if you're getting the ice and the car.
Hey, bud.
Yeah.
Yeah.
How you doing?
You're not crazy.
Yeah, my question was, why are we only doing $50 more? Which is with the others for $475, but we're not allowed.
I think we just did so well.
For the all.
For everything, yeah.
All right, let me go take a night check.
That's the mountain.
Huh?
You're heading home.
Home.
Alright, so that's basically it. Once I that's me, I didn't have any time. So I haven't had one too unless their coordinator down on Sean. The coordinator said school. All right, so I should see you tomorrow.
All righty. Just let me know. I think we'll be good to go for Friday morning. I'll just send you guys the info. Yeah, that'd be great. Yeah. All right, thank you. Thank you.
Do you have a ride, sir?
I do indeed. Thank you for asking.
You know, Robert Cologne. Gonna always be on my mind.
She's always making sure.
She always checks on me, that you're okay.
I need to tell, because I need him to send this thing. Look at me taking this pizza. They would love pizza. That's all she wants every day. And she goes, she's like, I want pizza. I want pizza. Right, Don? Pizza. Yeah. Not me, I like the pizza. I don't know why. Oh, you know why? Because I made it a lot. That's why. I went to those. Thanks, Don.
Yep.
For some reason, they always do the Yankees. Well, we playing Cleveland now today, right now. It just started. Oh, yeah, it's on top of that.
Yeah, I know, I left it. You ever look at that picture where I showed you, they got the scoreboard of the Annex Little League and they got.
Yeah, them, you know what, I forgot to mention.
I'm not complaining, but
Yeah.
are we opening up a can of worms for?
No, I
other
get
clubs?
it, no, I get it, you're right.
If they
I saw it,
donated
McDonald's.
it, but they have the symbol.
Yeah,
And the Annex Little League, yes, there's supposed to be a lease that they
Yeah.
can't find. They don't know where it is. There is no, like, they don't have a lease.
why they paying for it?
No, they got this $1 a year for 99 years. Yeah, but we
Really?
don't, but there's no, they can't find it. Where is it? You know, I'm not. Doesn't matter. They're still on park property. They,
Of course.
they have the use of that.
Are they making any money out of the kids? Because if they're only paying $1 for the park. And
Kids have to, people have to pay fees.
yeah, so who,
They keep it internally,
oh, I mean.
but they're taking funds in. So if it
Well,
was
you
free,
get grants and all that too.
yeah, but if it was free, we'd say, but they're charging money and nobody else could use those parks other than the Annex Little.
Yeah, and then they pay for it.
They're not really paying for it. So, but that scoreboard bothers.
No, yeah, I got you, yeah.
I know, but see, a park bench in memory of someone.
Exactly,
is-
that,
but
exactly
this is
right.
business. You're promoting. Now, some people will say McDonald's food is not a healthy food.
No, yeah, no, you're right.
High in calories.
No, you're
It's
right.
not good
Yeah,
for
I agree,
kids.
I agree.
So we're,
And it's an ad. It's an ad.
even though they pay for it.
Yeah,
it
whether
doesn't-
it's good, it could be Edge of the Woods, which is all organic, still an ad.
Right. So I'm not here to, because you know that's gonna piss off out there a little, because that, he thinks he owns everything.
Hey, ask me, please ask me if I can. Hey.
Let me get my paperwork.
Yeah, let me put this back in here. Let me talk to, I'll look this right quick, oh. Hallelujah.
Everybody wants everything for free.
That's true.
Free.
Everything.
We're starting to do that now. Like, we keep doing things for areas, and I'm not complaining about it, but now it's coming a trend where they want everything, like that project in the hill, they're shooting it down. Right? It's blight property, and the management team is mad about it.
Yeah,
I mean,
but what is it? They said that it's 5% affordable. But yeah, I mean, hopefully this becomes some kind of.
how much, it's not a month, you're asking somebody to eat more. It's not
Yeah.
right.
Are you talking about the Davenport conference?
Yeah, but it's gonna, sooner or later, you gotta take what you can get. All we can hope is that the Woodbridge case goes to the Supreme Court and they find that wrong.
Yeah.
And that means then other towns now can have affordable housing. It's the point is, we're never gonna have enough affordable housing in the state. And just realize that. It's not gonna happen.
If we want more affordable units in a as of right development, what we need to do is offer them carrots in order to offset to the higher levels of affordability. Because otherwise they're just gonna say no.
Numbers don't work. He said, how much more you want to protect?
Yeah.
So, and it's gonna go for it. So.
Well, I think that the thing we should be looking at is the 4% live tax that the state has, because that's not competitive. Anyone can apply for it. That's what the Winchester guys are doing.
Yeah.
And on its own, it can get rents down to like 60% of AMI. And then if there's a city abatement, you can get them further down. So that's supposedly, they haven't filed yet, but that's what they're planning to do. It's non-trivial. You need people who understand affordable housing finance, but it's not competitive. Anybody can do it. So I think that would be the thing to try to incentivize. It's like get people to apply in the state for that, and that'll take up most of the subsidy. And then people have to, yeah, get it down to.
All